Welcome back to Grizzle Live, everyone. Today we're talking about the Doctor, the King. It's Dr. Copper, the Copper episode.
Oh, I gotta get centered here. There we go.
There he is. Come on in, Tom. Join us for the Copper episode.
What's going on, man? Oh, guys, I was like, I had my A&W Beyond Burger come to me, and I'm like, everything was cool. It was like a minute away, and then all of a sudden, I see the dude is now walking. I'm like, what's going on? It was supposed to be a minute away, and then now I'm like 10 minutes out. I'm like, oh man, I gotta have my Beyond Burger. You know how it goes.
I guess that's better. I thought you were gonna say you saw him outside eating your Beyond Burger. That
was
the worst outcome.
No, I was like,
he's just looking at you eating your burger, and then he doesn't deliver it.
No, legit.
That'd be cold.
Oh no, legit. I was what's it called? I was like, they said like a minute. They're like, get ready, give him a second to drop everything off. I was like, cool, all right, good. Anyways, I get out there and it's not there. I'm like, what's happened? What has happened here? And then I find out that he's walking now. I'm like, oh man. Anyways,
do they have the sprint emoji in Google showing he's sprinting down the street to deliver
no. Uber Eats thingy job. What's going on? Good
Welcome
morning,
everyone.
everybody.
Welcome to Grizzle Live.
Oh man, I needed to get pumped up here, man. I was like, I had no food all morning. I was like, oh dude, I was like, got the Beyond in the hand. Let's go.
Guys, ready.
Yeah, class is in session. What's going on? Jeffrey, Ryan, Mr. Dersman, thank you everybody for supporting Grizzle. And a big shout out to everyone who's listened to the pod. You know what? We are like climbing the rankings like nobody's business. If you would kindly do us a solid and let people know about the Grizzle pod, we put a lot of love, care, energy, finesse. What other words, Scott?
We're going to number one, everyone. But it depends on you. You got to help us move up the rankings.
Yeah,
you've already. It's been amazing the support we've gotten on the podcast.
Exactly.
Everyone said they like it. It's helpful, so that's what we're doing.
Drifting. I don't know what. Hey guys. Anyways, good news. I'm not on the laptop. I brought my big ass monitor. That laptop is cursed, Scott. I was like, literally, I used it oh man. And it was one of those gaming PCs. Screw that stuff, Scott.
They lied to you, man. Those things are supposed to be the powerhouses.
I'm not getting that. Anyways, I had to connect I got this massive monitor in front of me, guys. What is going on, man? We got Copper today, Scott. We got Copper.
Ooh, Copper.
JG, thank you, man. Mr. Dersman. Guys, thank you so much for all the support. If you're in the YouTube, hit that thumbs up thing. And if you're on Twitter, guys, let people know, man. Give it the retweet. Give it the retweet.
Let them know we're live. We don't want anyone missing Copper, man. It's Copper's time to shine.
For sure, man. And don't forget, we're the originators of the Diamond Hands. Originators. So always lots of chirping, this, that, the other. We'll do a follow-up episode, guys, on Danimer. But needless to say, we resurrected it to here. You think we're gonna let go, Scott? Come on.
Yeah, we're making 15-year forecasts so we can let go of it in a few weeks. That's exactly how it works.
Oh man, Wall Street Journal, you're gonna have to come harder. You're gonna have to come harder, do better work. Who cares?
Yeah, I mean, they didn't even prove anything. They said it may.
Scott, you said it best in your tweet. And I didn't even see that tweet this morning. I'm like, wait a minute, that's exactly it. You said, who cares if it's 1, 2, 5, even 10?
Are we really going to nitpick about whether they said it was 2 and it's 10 when we're trying to save the planet? Like, come on, let's do something. How about?
I got the Tim Dillon mug, man. Fake business.
Love it.
Danimer's competitors are fake business. They don't know bioplastics. Danimer, real business there. Real business.
Yeah. I found another mini Danimer that's not as exciting for some legal reasons, but they're doing similar stuff where they're recycling plastic into virgin plastic, which means you can use it again on anything, which is kind of cool. So hopefully, if those guys, there's some red flags, which is why I'm not going to really talk about it very much here. But if they fix those red flags, then I think it's one that we should look at. But I'll keep it on the back burner for now.
All right. So we got Copper today, Scott.
So where should we start, Tom? I know you got a lot you want to talk about.
Man, I just dropped a bunch of charts. I'm like, Scott, hit them. You know what? I think we got to hit them with. Let's just show them the Copper chart. Let's look at Copper first and foremost. Let's look at Copper.
All right, let's do it.
All right, so let me just check. That's a little bit. It's a couple days old or whatever. Let me just check the copper price today. We're hanging above 410, so basically bang on. So it's this is a chart, Scott. This is a chart that This is the setup, man. We haven't hit. Copper is set to blow well through its last peak in around 2011, right? You see that just above, 450, 460. It's set up to blow there. This walkthrough is gonna take you through how we think through that and why, by definition, you're not gonna go out like you can go out and buy gold, Scott. Of course you can. You can go out and buy silver, but if I ever came to your house, you'd be like, hey, Tom, look at this. I'm storing copper pipe. We're gonna be rich one day. I'm like, what's wrong with you?
Use strong water pressure here.
Because I saw someone's picture where they're like, I forget, it was like silver something, some silver guy. But I'm like, this is crazy. He had like a wall filled with silver. I'm like, you can do that with silver. You can do that better with gold. Bitcoin, it's on a freaking USB stick, right? It's on your wallet, whatever, right? But with copper, you can't do that, man. People are gonna think you're nutty, and it's not gonna be right. Storing copper, but by definition, we're calling it the King of Commodities. We're gonna walk you through why, because it's used in everyday life, Scott. And so by definition, you got to talk about the economic backdrop. So a lot of the Bitcoiners, gold bugs, silver aficionados, they love to talk about, just the money printing, Scott, the money printing. So let's talk about the money printing, because it can go two ways. It can go to feed the economy and create inflation, Scott, which by definition benefits commodities that are used, right? And it potentially benefits gold and silver, and historically it has, right? And Bitcoin wants to carry that same shine, and I'm definitive that it will as well. But copper, Scott, is being used in the economy. Do you want to pull up that chart? Why don't we show M1, M2, whatever you got there? Why don't you want to talk
M2.
through those, right? Yeah, M2.
So what is M2 for anyone who doesn't know, Tom?
So this is money supply. I was going to show M1. Do you have my M1?
Did you have M1? Let me see.
This is year-on-year growth. M1's, I like M1.
Yeah, let me get M1. M1's floating around somewhere.
Scott, I got it.
Here it is.
Yeah. That's the
Here it is.
That's the one. That's
Let me get M1 for you guys.
There you go. I like M1 because it's more dramatic.
So I mean, both the same story, right? We got M1, we got M2, all doing the same thing.
Yeah.
All-time highs. I mean, this goes back to 1950. We're in uncharted territory.
Well, this is it. So this M1 just speaks to how. So basically, currency in circulation right now, unprecedented, Scott. Unprecedented.
Yeah, this is just cash that's floating out there. When the government prints more money and there's more cash floating around, this goes up.
Exactly.
That's telling you a lot of cash around.
Exactly. So that is exactly. JG, yeah, of course, man. You can't don't put your basement full of lead. Copper. Now
yeah. You can use it to shower in the interim while you're waiting for it to go up.
Yeah. So basically this is the premise for all of the inflation linked assets, right, Scott? Mm-hmm. Gold, silver, you name it, and copper. So it applies across the board. Now, Scott, let me just pause here. This is not an increase gentle. This is a parabolic lift higher.
Yeah, this is not a slow moving trade. This is big things have happened where we flooded the market with money. Now there's all this money sloshing around. The question is, how far does it get into the economy, right? Because it's sitting at the banks. Some is in people's pockets. You really need a lot of it to end up in people's pockets, so they spend it. It floods through the economy. If it's stuck behind the dam, that's not going to do as much for inflation. But people think that the dam might break, all the money's going to come out.
And Scott, just speaking to that, that's up 355% from the year before. That's crazy.
Yeah.
Unprecedented. Unprecedented, uncharted. We're in a monetary era that we've never seen anything the like of, right? And so when Scott and I, put together ideas, think about our fear always, like, I think it dominates 90% of our conversation. Inflation, inflation, inflation.
Yeah.
And, we're just permutating, always just coming back to each other like, well, what if we get this wrong, right? And so here's
Because
where
we're always looking at both sides, right? We're not inflation bugs. Oh my God, the world's getting
yeah,
it. It's okay, we think this might happen, but what if it's wrong? How are we positioned so we don't totally underperform or blow up our portfolios? So it's both sides.
yeah, exactly. And so, we're comfortable that what we're seeing here is very real on the inflation side. But, it would be wrong for us to say, listen, there is one dagger, one cure for this, and that's Bitcoin, right? Or that's gold, or that's silver, or that's copper. What we're saying is that you need an inflation protection basket, right?
Yeah.
And I would suggest among commodities, there is no better inflation protection than copper. You know why, Scott? It attacks both ways.
Yeah.
You know what? So my mentor, big soccer football fan from the UK. He would always tell me everything in football terminology, right? And he'd always say, "Listen, I got an attacking defender." This is in like, soccer parlay, English soccer parlay. And I'm always looking for attacking defenders. And attacking defender is like, it's copper, right? Whereas gold is a defender, it's your pure insurance. But if the market's running, the economy's on fire, it may not have that same luster relative to a copper, because copper gives you the defense of inflation, but it attacks as well because people are using it. People are
So
blind.
you get the inflation hedge nature of copper, but it's also used in the normal economy. So when the economy's booming or if demand is really high for copper, you win both ways. So that's why we're talking today about why we like copper so much. It helps you on the defense, and then it's not gonna your portfolio is not gonna go nowhere if we're wrong on inflation and the economy just does well. And then we also got electric vehicles, which is another big source of demand down the road for copper.
Yeah,
So you
exactly.
win both ways.
Win both ways. Make sure my phone's turned off here.
What's next? What's your
Okay, yeah. So that was good. Now, Scott, you've done some fantastic work. We're talking about inflation. Scott went into the vaults. He went into.
I went back to the 70s. I put on my 70s clothes, hand downs from my parents. I got into it. I got my bell bottoms. I was ready to go.
What's going on? Mr. Historian, show us what's up.
So what you want to know is, does copper work as an inflation hedge when inflation's going crazy? When did inflation go any crazier than in the 70s? I don't know if you guys remember, the federal funds rate that they set for the cost of money hit almost 20%. I remember mortgages, I think, were 24% or something. Some people paid 17, 18, 25% for their mortgages for interest. So it was a crazy time. But now I went back in the vault to see what copper did. So copper is the purple line, and then inflation is the kind of blue. That's just inflation growth. So start in 76. This is kind of when everything picked up. When the Fed was scared about inflation, it was running crazy. They raised rates. Look at what copper did. It went from 1,200 to 3,000 over that period. So as inflation was heating up, copper is a hedge. It went up with inflation. So it did what it was supposed to do. That's the most important thing. So if we ever get a return to inflationary pressures like we had in the 70s, which is probably the worst case scenario if you think about it, copper is going to do what it should do.
Yeah. So there is, so that, so inflation camp, you've got in a very, very inflationary period, where if I'm reading this right, Scott, we were getting inflation north of 10%, almost 10%, right? PCE.
Yes. Yeah, right. According to that indicator, year-over-year growth. And then rates went up above that to 20% to try to tamp that all down. And then it started to work. As you see into the 80s, that was... So what happens is when interest rates are going up, it's an inflation hedge. But if interest rates go up too much and they choke off economic growth, well, then there's the demand aspect for copper, right? People use copper. So if they're using less copper, then the price comes down. So what you see here is when it was just an inflationary worry, copper prices went up. They did what they were supposed to do. But then once rates started to choke off economic growth, while the economy sputtered, it wasn't doing so well. So copper prices started falling then because we weren't using as much.
Right.
So that's a nuance. But as long as we know that copper will work when inflation is going up, which is all we care about.
Yeah. Nice.
So there we go.
Nice.
So we got that out of the way. We know copper will work if inflation comes. But
Okay.
there's other things to think about.
Exactly. And now we need to talk about commodity super cycles, Scott. Let's talk about commodity. Yeah, that super cycle chart. This is from Bank of Canada. Boom. This
Whoa.
is like, and
Whoa.
so Bank of Canada does, because you know why? Because Canada is a resource country. You should at least expect our central bank to do some work on commodities. All right. So, you know, you can't expect them to win everywhere else, but at least do the homework for us so we don't have to. And what this shows, Scott, is base metals, livestock, agricultural products, oil. Okay, sounds like
is this based on the price of those things?
Okay, so I'll explain it to you, right? So they're drawing a long-term trend. There's a long-term trend in these things, right? And what they're doing is basically a statistical analysis over that to say, listen, what is the deviation to that long-term trend, right? So the way it works is it's like an organ, right? And the why commodity, I'm going to get into the details of this, right? But why do commodities work in super cycle fashion, Scott? You know why? Because capital, right? Capital gets deployed. I'm going to talk. And so where you see the bigger, you know, ups and downs are in the ones that require capital, be it in oil, be it in mining, right? So what ends up happening when so what you end up getting is you get this long periods where basically there's a ton of investment, Scott, you've seen this in oil, right? Yeah. So you see
a lot of wells drilled.
It's a lot of wells drilled. So, okay, all good. Price is really high because you need price to incentivize all of this CapEx, all of this capital investment to go into the ground.
Yeah.
Then what happens for the next 20, 30 years? And Scott, it's not good.
Everyone's drilling because all the capital, and then they always over drill. So in commodities, it's called a commodity because you never get it right on supply meeting demand. You have not enough supply, prices go through the roof. Everyone and their mother wants to get into oil wells. They all start drilling. Well, then all this production comes on and it's too much. Then the price falls. Then you get no investment and the cycle goes over and over again. So that's what this is showing. And this happens in other commodities as well.
Yeah. So this is a great framework because you have to buy into super cycles, right? You have to buy into the fact that what ends up happening, and I can talk about it logically, and we know it because Scott and I have both been commodity analysts for nearly our entire careers, is that we understand the laws of capital getting put in the ground and then capital starvation, right? It goes like that, opens and closes. Now, it's also important to know where we are on the long-term trajectory of consumption per capita. Very important. Now, Bank of Canada has done some work there as well. I like these charts because it shows base metal consumption, okay, per capita, GDP per capita, right? And so what you're saying is that basically metal consumption per person, as GDP per capita increases, that's the x-axis, guys, you should by definition be consuming more metals, okay?
This is basically as countries grow up and you're not farming in the field anymore, and now you live in a building and you go and you drive around in your car, well, you use more metals. So that's all this is showing. As countries evolve and develop, their use of metals per person goes up. That's what this chart is.
Exactly, and it's a great setup because it does follow, right? Because with infrastructure, with base metals, the early part is very commodity intensive because you're building the infrastructure, you're building the wires going there, you're building the buildings that take a ton of copper. You're using these base metals, but as you reach kind of a steady state, you've reached the GDP per capita of 40 international dollars or whatever, right? And once you get to that level, then you get to some sort of steady state, right? It's just to maintain the whole thing, right? But the important line here, 2 lines really: India, Brazil, 3. India, Brazil, the world.
World's pink, Brazil is brown, and India is purple, all the way down to the bottom.
Right, and so this is critical. This is critical understanding here because why are we commodity bulls? Structural, long-term, specific commodities, of course. It's this. You have to.
It all starts with this, doesn't it? Do people need more metal? Yes. So that's where you start it all off.
And does the world always get better? And we are firm believers the world gets better. We are not gold bugs. We are not in the view that human ingenuity, etc., can ever be, can ever be held down, right? You have to believe that progress happens. And there's a great Twitter account that highlights this, where basically, lifespans, got everything you can imagine. We are great. Great stuff, right? So JG, what is the best way to invest in copper? We're gonna get to that, but I gotta give you guys the background. We're not just gonna leave you with, hey, here's 12 names and
stickers. Nope.
No, JG, I gotta give you the highlight of how it all, exactly.
We want you to know why are you buying these tickers? Look at
Exactly.
Danimer now. When do you think people are getting shaken out because of Danimer? Because now they know exactly why they own it. And I see the people in our chat who have followed our Danimer. They know as much as we do. They feel good about things because, oh, whoop-de-doo, it's 10 years versus 1 year.
Yeah, exactly.
Same type of thing.
Yeah, so, but we'll get to it, and I'll give you kind of background here. So anyways, that's critical here. Now let's move to the next chart, which is, Scott, it's actually the investment. That's the chart.
Yes.
Right. So coming back to what we were talking about is the investment in the ground is at historical lows. Okay, so this is fixed income mining investment, shafts and wells in U.S. dollars in America. Unbelievable. Okay, so that whole what I was talking about is investing into the ground, coming out, boom.
Is this metal exploration, or does it include like all wells?
No, mining
Okay,
specifically. Yep. So bottom line is we're at all-time lows, right?
We've been underinvesting in finding new metals.
Exactly. So that's critical. Now the next one is it's the one that shows supply demand for copper. Now we're getting into it, guys. Supply demand for copper, Scott. It's that blue chart with the yellow line projects. That guy. Yeah. Okay. So this is from Wood Mackenzie, and what Wood Mackenzie does is basically they bring together all the projects around the world, stuff that we can't afford to do, and they do it, and they publish it somewhere.
And they charge so much money for it.
So much money, but we found the chart, we give it to you, because this is the answer.
Here you go, guys. This chart alone is probably worth $100,000. There you go.
Yeah, totally.
Right to you. No joke. I used to pay millions at my old job for this stuff.
Unbelievable. Yeah, you get those databases, right? All of those guys out of all those databases.
Because it comes down to these Wood Mackenzie guys. They have lots of people on the ground putting this stuff together. You got to pay people a good wage. So that's why it's expensive.
For sure.
Tom, I'd say we should tell them the nuance of these charts, because everyone loves to use these charts as like the bull thesis on any commodity, whether it's oil or whatever.
Yep.
But what you see is as you go through time, if you would move this back, it would have shown that same little wedge where we need more supply, but the supply comes through. So I think what's more important than saying there's a wedge, because people will drill more, they'll drill more wells, they'll find supply, is how wide that wedge is versus where it usually is. Not necessarily that it's not going to get filled, but the bigger the mismatch, the higher the price has to go to incentivize people to find all that new metal.
Yeah, so that's the wedge is very wide, Scott, first and foremost. And for other commodities, let's just call it U.S. shale. If the price were to go to 120 tomorrow, you can guarantee that wedge gets filled really quickly.
Yeah, shale turns on in 3 to 6 months.
Exactly. Mining, copper specifically, does not work like that. It can take upwards of a decade to get a sizable, a good sized project off the ground, start to finish. And that's a very good timeline, Scott. A decade. Environmental permitting, all of that. And that timeline has only increased. So bottom line here, what this is telling you is we are facing, not in like 5-7 years, we're talking in 3-4 years, we're going to face a serious gap, right? And
just a question for you in permitting. So would you say like copper mine permitting and stuff, that takes longer than an oil well, right? Because the oil well is kind of hidden under the ground versus the copper, you got to dig up the surface somewhat.
Yeah. Well, yeah, copper, you got a lot of work to do, man. You got to build the pits. It's a serious work. And mind you, again, oil and gas can be very serious as well. As we know, offshore is not a joke. I would decline, that kind of stuff. Like offshore is
but onshore is relatively straightforward once you figure it out.
Exactly, right. There's far more complex projects on the oil, continuum, but in copper mining, etc. And again, for all metals, we've taken the easy stuff. We have taken an easy stuff. Exactly. It takes a decade to do this stuff, and that's like a good timeline. You know,
Wow.
once you've added environmental permitting, etc., check with indigenous people, because that's a no-go, right? And this is all of this Bitcoin stuff, you know, etc. The problem is with Bitcoin, there's an whole environmentally conscious group around Bitcoin, but we have to come to the reality is that it's being made by coal in China. Like, you can't get around that, right?
Hmm.
So that's a critical. Now the next one is the short term. It's a Chris Wood one. Copper. Scott, I put it in there from Chris Wood. Copper inventories at three major metal
Oh
exchanges.
yeah.
Okay, so that is the longer term picture, but more critically,
Now we're getting into what's going on today. Like, why do we
yeah.
like Dr. Copper so much?
Yeah, and so this is a 1 year picture, but if you actually go further back, Scott, it's actually at a decade low. Inventories are at a decade low, and that is why copper price is sitting where it is today. Like in the here and now, we simply don't have copper.
So
Flat
this
out.
this basically backs up what we're seeing of that wedge, that there's not enough supply. That's being backed up because inventories, there's less copper sitting around than there's ever been.
Yeah, that's exactly right. That's exactly right. And so that's the big macro backdrop, guys. Now valuation. Now we're gonna get into stocks. Now I gotta hit it hard, right? So let's get into there's that FT chart, Scott.
Ah, yeah.
Now this is a phenomenal chart. Basically, I'm just seeing to make sure there wasn't another one. It looks at the valuation. It looks at commodities. It's a equal basket relative to equities. Okay, so what we are sitting at is basically half century lows.
Wow, it is way down there now.
It's incredible, right? And so that's relative to equities. Well, then you may say, well, listen, maybe commodities did good on an absolute basis, but it's not shown in this chart. But we're saying, listen, there's a real argument here to be owning equities, right? Owning commodities over equities.
Yeah.
And this chart
And this doesn't necessarily mean it's going to go back to 6 where it was, right? This just means it's way too low versus where it usually is. So the chances of a catch-up trade and it outperforming stocks are getting higher and higher.
Exactly. Now, Scott, there's a Bloomberg Commodity Index chart, 1980 to 2021. This is another way to look at that. Just again, we're telling you we're not buying at the highs. Scott, in fact, we're buying at multi-decade lows since the 80s.
That's
right?
what you want. Buy low, right?
Buy low, sell highs. And in Danimer, buy low, buy more higher all the way. Who knows? But what we're saying is we've given ourselves a margin of safety. They're cheap versus U.S. stocks. They're cheap on an absolute long-term basis. So there. All right, now
we're putting the puzzle together one piece at a time, right?
Exactly.
You'll see what we're doing here.
JG, that's right. The moon. And A-Rock's asking, all this underinvestment resources seem like manufacturing housing costs will go up as a knock-on effect. That is correct. And we're seeing that with lumber. Lumber.
If your pipes cost more, if your lumber costs more, who knows, labor goes up. Yeah, it all goes into the cost of the house.
So now the team at Capital 10X, those guys at Capital 10X have done a good job here they've sliced and diced the universe, looking at small caps versus large caps. So small, mid versus large. So that guy, Scott. So they've looked at this. They've taken all the producers. Now there's a plethora. I'm going to just caveat this going back. There's a lot of copper companies that are not in production, so they're exploration, Scott, pre-production. This does not include any of those, because you know why? You can't do valuation comparisons on those companies.
So this is only producing companies.
This is only producing companies, okay? And so again, all that we've stated earlier is that copper is a very, very attractive place to be. There are clearly a lot of exploration copper companies that potentially some have great projects, some probably don't. But you got to do your due diligence, and it's company by company by company. But on the production, if you're a producer, you can be a small mid-cap producer, you can be a large cap. Scott, this is a powerful chart, but what it shows you is that the small mid-cap producers are cheaper than large caps on every multiple basis, be it for price to cash flow, forward, price to cash flow, price to EV to EBITDA forward, and forward price to sale. It's incredible. It's across the board, right?
And it's like half the price, or better.
Exactly. So what we're saying very simply is that, okay, so there's a valuation disconnect here between these two, but critically, Scott, Jeffrey, ripping the pipes out of my walls as we speak. Bingo. So you know what?
It'd be better if you said ripping the pipes out of my neighbor's house as we speak.
Do you remember the last peak in copper? You know what was happening? Construction sites were getting ripped off for exactly that.
Yeah. I remember hearing that. Like, it would be on NBC and CNN would cover it.
Man, just sit with a gun on top of your copper pile. You never know who's coming with a truck. So the thing here, Scott, is critically here. I'm going to tie this all together. There's been no investment in copper because there hasn't been the incentive. So these large guys actually have that wedge coming up, Scott. But what have I told you about the wedge? And that we talked through already. It takes 10 years for them to make up for that lost production, right? So
what happens if prices go up today and they're like, they can't make any money off that higher price for 10 years? What do?
Well, they can enjoy the higher prices for their producing assets right now, but as you know, investors want to see production growth. They want to see some infill of growth. The best, easiest way in this market, if I was an investment banker, I'd be making bank right now. Bank, Scott. I'd be bringing Freeport, bringing Lundin, bring them to the table and saying, listen, do not put $1 into the ground. There is a group of companies that are trading at a deep discount. You got to look at them, because what ends up happening is you can scoop those companies in. They trade at nearly half the valuations, in some cases less, and then you can bring that production into yours. You're trading at a much higher valuation, and you get the roll-up effect, guys, the roll-up effect. And
so depending on how much more the big caps are trading for than the small caps, it makes more sense for them to just buy the production instead of wait 10 years and do it themselves, right?
Bingo, that's it. And so right now, the view, we are definitely in a commodity super cycle setting in because of all of the background inflationary, the money printing, the lack of investment, all of that stuff. So these guys need to acquire. So we're in a commodity super cycle, and we're about to enter what always happens in a commodity super cycle is an M&A boom, Scott. And so let us now show the chart of these small mid caps. Now we're getting into the stocks, guys.
All right, you want to do small
mid caps? Yeah, so bring that table up. So here it is. This is the table that everyone needs to look at closely, right? So this is the entire producer universe, Scott. Everyone who's producing in the small mid cap space. Okay, so among small mid caps, on forward price to cash flow, this is all consensus analyst estimates. Price to cash flow, EV, EBITDA, price to sales. You can see two companies that really stick out: Sierra Metals and Hudbay Minerals. They trade at like deep discounts relative to everyone else, right?
Yeah.
And so within a cheap pool here, you already have two companies that are already cheaper than everyone. So an easy way you can talk about it, an easy way you can think about it is there's two strategies to do here. You say, listen, I'll just own every small cap, one, or you can own the two that are the cheapest of the lot. But the bottom line is you want to be on the cheaper side of the scale as opposed to the more expensive, right? And now mining is a different business too, right? In the sense that you have to do next level of due diligence. So it's interesting. Hudbay Minerals, they're not so aggressive on production growth, Scott, but they've always met their guidance. Very hard to do in mining. They've always met their guidance. Sierra Metals blew the roof off last year during COVID. They grew EBITDA by nearly 50% and production grew by 6%. Right? These are like basically you have a lot of people in the mines that are getting COVID.
So is that leverage right there? You grow production 5%, your EBITDA's up 50%?
That's leverage.
Wow, damn.
And they're projecting EBITDA growth of this year under current commodity prices, so the current copper price, to be up 80% in 2021.
Wow.
Okay, so that's Sierra and Hudbay. Very interesting here. I'm looking at the other one that kind of is interesting. I do have to look at Capstone. That's one I missed, flat out. So that's one I think you could definitely own too. Like it's done incredibly well. That's the only thing. It's just it was a very I think that's one that is very interesting. Eero, you get the other end of the spectrum, Tasco. But anyways, have a look at this table. Figure out this is your starting point. This is where you start, right? So now let's look at the large cap, Scott. You can do the same exercise in the large cap universe as well. Challenges, Scott, they're all expensive to begin with, right?
Yeah. So they're going to show slower growth in EBITDA, slower growth in production than the small caps would.
Yeah.
In general.
Yeah, and sizably.
And they're more expensive.
So the only two that screen here well are First Quantum and Lundin. Now I know First Quantum's project is I've met the management team a bunch back in my old world when I was managing the mining fund at TD. But what the problem with their mine is that it's a challenge. It has geological challenges. It's challenged from a mining perspective, right? So they'll get it, but it's gonna be harder to do. But that's
more expensive and take longer.
That's why it's cheap, Scott, right? So and now Lundin, Lucas Lundin, one of the great ballers in mining. Scott, do you remember Lundin Petroleum?
No, that's before my time.
Oh man, so Statoil found a massive oil field off of Norway, and Lundin Petroleum was in ahead of Statoil.
Wow. Was this like the beginning of the Norway boom in oil you're talking?
Yes.
Wow, that's legendary because they found like so much oil there.
Yeah, and that was Lucas Lundin who found it. And that,
wow.
It was his company, but Lucas Lundin may be one of the great explorers of our time. Genuinely good ones. I know a lot of people talk about Robert Friedland, and I think he would be one of the great promoters, whatever that is. But Lucas Lundin would be one of the great explorers of commodities. He's found, it's been across the board. Like Friedland doesn't have a home run in oil, like the Norwegian shelf. That's insane. God.
That took Norway from selling fish to like selling diamonds.
Yeah, well, so so it's not back that far, but it's the giant they found.
Oh, one of the newer giant ones.
Yeah, sorry, cool. It's not the original shelf, but it's the newer giant where they went back over and basically it's renewed that whole shelf. Cool. Right? So so anyhow, this is a full summary there of the names. I'm not there's nothing here that really piques my curiosity, to be totally frank, but I will say this, Scott. Big, large funds are going to, from a liquidity perspective, they may find that they're forced to buy these larger companies, which, Scott, you know what ends up happening? They continue to increase the valuation of these names, which is what we've seen so far. So what you end up seeing is that these companies, it keep getting pressure where their equity valuations keep getting higher. Their incentive to pick off these smaller names I can buy them for double. I don't even care. It'll roll.
Yeah, so it's like peanuts. So the higher their valuation gets, the better the chance they go shopping.
Exactly. So bottom line is, I don't think these valuations are going down for institutional investors. If you're a large institutional investor, you kind of throw it in Freeport and say, it's my name. But these guys are ultimately going to have to start to do the M&A boom. Scott, that is a whirlwind around commodities and copper. And
Let me ask you one question on small cap. I'm curious. What is the risk you're taking in playing that play? Is the only risk if they mess up on their drilling, if they have bad drill results or something? Is that why the valuations are different most of the time?
No, it's not. No, the valuations can get much tighter, right? It's just like anything, right? So you get periods where valuations of groups where basically you'll get the money. So a big part of playing commodities is knowing where the money will flow, right? And so that first leg of money, especially if it's institutional, goes right to large cap.
Right? Is it the shot glass? Are you going to get to the shot glass analogy?
And you get to the shot glass, and then they look exactly. Then they've got So it goes right to these producers, and there aren't a lot of them, so that kind of elevates their valuations, and then it all kind of flows through. But it always, and I'll tell you, when we hit the top of the boom, Scott, there will be no small cap that doesn't trade at a premium to the large caps, right? Because then you're looking for growth. Because then I'm like, listen, copper is at 5,000, not 5,000, but copper is at $50. And you're Freeporting, you don't have a new mine? I've got this little guy here. He's doubling his production next year. But it's in his backyard. I don't care. But I'll still pay for it.
Yeah, I mean, when we did this for our full-time jobs, we saw it again and again. When the commodity prices heat up, M&A heats up too. And you get that cycle where everyone's buying everyone else. It happens in gold. It happens in copper. Yeah.
Exactly, guys. Yeah, so, this is a screen, right? So, obviously, Sierra, we called that last year, mid-year. We said, listen, this was a excellent value opportunity. Now there's like this table gives you a good delineation of everyone there. Go bit by bit through the small cap table, guys. Go bit by bit through it. We think just on a front end valuation basis, quantitatively, Hudbay, Sierra screen incredibly well. Capstone, I have to look at the growth of Capstone. So that's the other one that, one thing we'll add for the next iteration, just hopefully, figure out what's going on is just the growth rates of the different ones in terms of production. That's a little trickier. So Sierra is going to be growing throughput in their mines by 15% on an annual basis over the next 5 years.
15% a year or 15%?
A year.
Oh, nice. So they're ramping up production.
Yes, so they're ramping up production over the next 5 years. Nice sweet spot to be in. Hudbay has Hudbay is kind of like it's flash. One of the other ones has like this bump up this year, and it stays flat for 3 years, and potentially there's another mine. So like you see what I mean? Because these mines don't come on like building blocks. Hey, okay, I need some growth. I'm sorry, you didn't sow for growth 5 years ago. I'm sorry.
Yeah. Wait in line. It's gonna take you a few years.
Exactly. So I forget. One of these guys was like, you're gonna go through a period with nothing, right? So Copper Mountain. That's one we gotta look at. As a Canadian, on the Canadian comp sheets and stuff, Copper Mountain gets a lot of love from America because there aren't a lot of American tickers. Scotty, just if that's the one, I just want to make sure. Yeah, it's Copper Mountain. Let me just double check. Yeah, no, Southern Copper. Sorry, Southern Copper. Copper Mountain, I'll have to look at. But anyhow,
Southern Copper is a U.S. ticker.
Yeah, it's a U.S. ticker, and it's it just can you pull up the large caps again, Scott? Just quick.
Yeah.
Can't find it here. Yeah, exactly, guys. So this, how the situation where everyone can relate. You can relate. Because you can't buy the U.S. MSOs individually in America easily. At least you can probably buy OTC. But so Aurora, Afria, Canopy, this is the whole MSO gang kind of thing. That these guys will get higher valuations because Americans can trade them. Scott, this is in real time. Look at this.
Wow. Yeah, that's a big difference.
The Southern Copper is U.S. traded, and look at that. People are like, hey, I need a copper name. It's Southern Copper.
It's the only one I got.
I can tell you for a fact, Southern Copper is not 2 times better than like Antofagasta. I can tell you that for a fact. And Antofagasta trades in the UK with an American ADR, and it's trading on half the multiple of Southern Copper.
I'm curious. Do you have a preference for price to cash flow versus EV to EBITDA? Like, did you use one more than the other when you were TD or?
Yeah. So so EV EBITDA, price to cash flow, I use them as blended, right? And it depended on the analyst as well. But I kind of looked at it on a blended basis. They should be kind of pretty similar, and they are pretty similar. But price to sales, I think is just it gives me kind of an idea of the volume coming through, right? At high level, and then I can think about the margin. But then finally, you think about NAV, which is the net asset value of all the project, which is like a DCF, Scott. So
yeah. I can explain to you guys quickly what the difference is. The main difference is price to cash flow doesn't include the debt that the company has. So if you do EV to EBITDA, you're looking at apples to apples to say, okay, right, it may look cheap price to cash flow, but if it has a ton of debt and doesn't produce a lot of cash flow versus that, it'll look more expensive on EV to EBITDA and it'll adjust. So that's an interesting move. It's nice to blend the two, but if you have one that has a ton of debt and is risky, EV to EBITDA will catch that.
Yeah, that's a great, fantastic point. That is a very clear. And the other part about EBITDA that doesn't cover it and why cash flow is you want to think about capex as well, depending on if you're thinking about free cash flow, etc.
Very true. Yeah. So the cash flow is a better measure than EBITDA because these guys have to reinvest a lot to keep drilling.
That's right. And I'm saying nothing's pure, but from a quantitative perspective, to your point, as long as you know what's inside each one of those, yeah.
Yeah. Cool.
So JG, this was our copper update. We'll do something on uranium. I'm okay with missing things if it's not in my central thesis of like where the world's going. I still struggle with a super long-term, super bullish view that we're gonna have lots of nuclear everywhere.
It's still NIMBY. I just haven't heard a change in NIMBY. I don't know, maybe if you know where like these things are getting built. I know that Bill Gates is working on a technology that could be change the game. But very early, we're still like 5 years away from that being built out. But what if they prove that you're not going to blow up your backyard with a nuclear plant? Maybe we go down that road. Yeah. It just seems like right now I haven't heard of it speeding up. You look at Japan, they're going the opposite way. They've never bought more oil to like heat their homes. So, I don't know. But now you have everything you know. Copper, man. You're the copper expert at the dinner table now. Aren't you happy you checked in today?
Yeah, guys, and hopefully we give you guys a framework at least. That's it. So what Grizzle believes in is leaving you with frameworks. You don't have to agree with us on anything. Actually, nothing. But what makes a great investor is always sitting and hearing points of views, and whether you agree, whether you disagree, you're civil, you're cordial, but you ask a good, tough question. That's what makes you a great investor. You don't be like, fuck you. That's who can, you know what I mean? It's like just someone disagrees with you, to be like, bring something to the table. And then, then you got,
we're all in this together. It's not a fight to be like, I won or I won. What we're doing is you're talking to try to figure out what the answer is. Yeah. Two heads are greater than one. 3 heads are greater than one.
That's and the YouTube chat is the best.
Yeah.
Yeah, guys.
That's why we're all here. We're doing it live because then we get to the point. We figure it out. We all make money.
So big favor, big request to the Grizzle family on YouTube, Twitter. Please let everyone know about the pod. We put a lot of love into that. Which I think the goal is to get this on the charts. I know there's a lot of investing pods that I don't think come close to what we're dropping. So I would love to see that pod. Let a family member know, man. Grizzle College, right?
If you've listened to the pod, leave a review if you haven't. Just something quick. You could be like, I love Grizzle Diamond Hands. It's all good.
Yeah, that's it. It would be great if you've listened to it. Just give it the review. Let's get this thing up the charts. You know what? It's we can do that.
And we got more requests for the hat. Tom, you should tell them about Friday. Are we gonna do a raffle?
Oh no, actually we're gonna do it tomorrow, guys. So
you're gonna do it tomorrow?
Yeah, so tomorrow, we got all the hats. We were just waiting because I am not gonna sit down and write each one of these labels. We're not gonna do that. So we got the printer set up. We're ready to go. That was the key part here. So we're ready to go. But we're gonna do a big. If you're on Twitter, guys, actually, you know what? We'll do one for YouTube too, guys. If you're not on YouTube, just put hats. Put hats in here, and just put a comment underneath this, and we'll put everyone in a draw. And for the classic, and then which Scott's wearing right now, and then we got the diamond hands, which I couldn't find immediately, so I had to put on another one. But we got those two, and then we're gonna give a bunch away. So we're gonna give a bunch away.
So look for that. So tomorrow the raffle's coming then.
Yeah. Oh, Jeffrey, thank you, man. That's James Alfred's our master creative.
Yeah, James getting it done every day. He's out here grinding too.
So the last pod had some great artwork on Elon and a arc tattoo. It was serious. Yeah. So yeah, we'll get the hats ready, and then they'll be at the store on Friday. So a free giveaway to the fam, and then they'll be available.
And then you can get one if you want one. Yeah.
Yeah.
We'll do more special edition drops.
Yeah. Oh yeah, indeed. All right, guys. Thank you.
Thanks for hanging out. Copper episode. Dr. Copper has left the building.
Woo.
All right, everyone. Check you later.
Thank you.